Hey, what's up my friends? It's good to have you back with me once again. So welcome back to another week of market analysis. So this week I'll look to cover the New Zealand dollar and copper because if you recall, last week I mentioned that I was actually looking for shorting opportunities on both of this product and I actually got short and I got stopped out. So I'd like to share with you what is my thought process and what I did afterwards. Also, I'll share with you on a particular trade, sugar, because I'm sure all of you love sugar. So why not talk about sugar, because it's currently trading near multi-year lows and it's definitely, I would say, very interesting to watch as a trend follower. So all this and more in this week's market analysis. I'll see you there. Okay, so this is the weekly chart of New Zealand dollar. So as you can see, the trend on this currency pair is clearly still very much intact towards the downside. We have lower highs over here, lower highs, lower lows, and what happened this week is that price breakout of the multi-year lows because New Zealand dollar had a interest rate cut. So let me share with you rather on the entries that I took last week. If you recall, on the 4-hour chart, I mentioned that last week I got short basically when New Zealand dollar traded below this swing low over here. I got short on this candle and my stop loss was 2 ATR, I think somewhere around here. So what happened was price went in my favor, consolidated for a while, was in the money for a short moment, and the next thing I know is that I got stopped out of the trade. So I got stopped out. So looking at which, most new traders, right, when they get stopped out of the trade, they feel very upset with the markets. They feel, hey, why is this happening to me? Is someone, hunting my stops? Is someone, playing dirty tricks, dirty games, So they get really upset, they get very emotional, and they take it very personally. But the things I want to share with you is that there is nothing personal about it. Your stops are in place to prevent the full destruction of your trading account. It's to help you preserve your trading capital. That's what your stops is for. There's nothing personal about it. The market isn't against you. I hope you actually, understand this, alright? The market is never against you. So what happened for me is that I got stopped out of the trade. It's very common as a trader, you get stopped out of your trades very often. So when I get stopped out of my trades, I don't have such, negative thoughts and emotions. But the thing is this, the next question that comes into my mind is this. I ask myself, is the trend still intact? Is the trend on New Zealand dollar still intact? And I look at the charts and I say, yes, it is still intact. So if the trend is still intact, the next thing I want is to, to go short on this product once again. Meaning I want to re-enter this trade once more. And looking at which, you look at the chart, the best price to actually re-enter is at this swing high over here. But the thing is, we are not trading on hindsight. We are currently trading in the now. The most right-hand side of the chart, we are trading on the right-hand side of the chart. We are not trading on hindsight. So there's no way I can predict that, price would come towards this swing high. If I know, I'll take a shot down there. But the thing is, I never know. What I can do is only trade based on what I see, not what I think. So let me share with you on where I got short instead. So it isn't the best price, which is at this swing high over here. Because like I've said, I don't trade on hindsight. I trade based on what I see. So where I got short was basically over here. Because looking at the chart once again, when I noticed that, New Zealand dollar has still been respecting the 50 EMA, right? Bounce over here, and closely almost over here. So where I got stopped out was, if I'm not wrong, if my memory serves me right, I got stopped out based on this wick over here. When price smack up higher, stopping me out for my trade. And then it closed lower. So what I noticed that the 50 EMA is actually, may still hold. So what I did was I went short once again around here, just around the 50 EMA. I went short once again. So the thing is, the key question now is, where do I place my stops? Well, most traders, I can say that, they probably place their stops above this swing high over here because, that's what textbook says, right? Put your stop loss just, 1-2 pips above the resistance. And the thing about putting your stops over there is this. The whole world can see that resistance level. And the whole world knows that, traders should be putting their stop loss above the resistance level. And what's going to happen? If you think of it logically, there is incentive for those with deep pockets to rate that level, to rate that stop loss just above the resistance. Because there's a cluster of stop loss above there. There is actually incentive for them to rate the level. So what happened is that, I did not want to put my stop loss just above that resistance. Instead, I want to put it away from the resistance. So I gave it myself some buffer and I put my stop loss somewhere around here. So my stop loss is actually quite wide. It's typically wider than my usual 2 ATR trades. I think in this particular scenario, it's about 2.5 ATR. And the main reason is I did not want to put my stops just above the resistance. So I placed my stop loss over here, my stop loss, you can see over here. And again, I don't say I'm a fortune teller or anything, but you can see that, price tried to, rate above the resistance, and after which we had this sell down once more. And the sell down occurred basically because, New Zealand dollar cut their interest rate. But again, I can't foresee that, New Zealand dollar, the currency is going to have a rate cut. I can't predict that. The only thing I can do is just simply trade what I see. And fundamentals or not, there's 50% of the time fundamentals will work out in your favor. 50% of the time, the fundamentals will work against you. So it doesn't really, basically fundamentals don't play a part in my trading. I simply just trade what I see based on the chart. So for this New Zealand dollar trade, I got stopped out earlier when price traded below this swing low over here. Then I got stopped out. And again, I re-entered once more. My second trade, the stop loss is over here. And right now, price is currently traded near the lows for the week. So I'm not sure what is going to happen in the coming week. All I know is that I'll watch this particular currency closely. And we'll see what happens next. So up next, let's check copper. Again, it's a very similar story for copper. If you look at copper, I mentioned it. I'm not sure if I mentioned last week, but I actually went short when price traded below this swing low over here last week. So I got short on this candle. Price went in my favor, and I was in the money for a while. So most new traders, they'll feel, they'll be ecstatic. They'll be happy, like, woohoo, I'm in the money, right? Life is good. Trading rocks. And when they have such thoughts in the market, when they are having, their emotions based on the outcome of a particular trade, what happens is that the market can as easily destroy the emotions that you had earlier by trading higher and stopping you out for a trade. So same case, I got stopped out on copper as well in this particular scenario. And the thing is this, I'm never happy if price is in my favor. I'm never sad if price is against me, because all I know is I'm trading methodically. I'm sorry, in a very firm methodology. So there is absolutely no reason to feel upset or happy, because in the short run, your trading results are as good as random. So let me repeat that once more. In the short run, your trading results is random. You will only come out ahead in the markets, right? You will only make money in the long run is if you have an edge in the markets and you allow the law of large number to work in your favor. So in the short run, in the next one trade, the next two trades, your results is basically random. So do not base your emotions on a random outcome, because it does not make sense. So looking back at this chart, I got stopped out. So what happened next is I asked myself this question once more. Is the trend still intact? Is the trend still down? And looking at which, it's very clear the trend is still down. So what happened next is I asked myself, where would I want to get short once more? So here is where I got short. So slightly different from the New Zealand dollar trade, I noticed that copper, we have this resistance over here. So what happened is I got short at resistance. My stop loss is about 2 ATR, is somewhere around here. And once again, we see a very similar scenario where price spiked higher, taking out the cluster of stops above here, and then it traded lower once more. It's a very common thing, for price to spike above resistance, to spike below support, because those are where the stop loss are. There is incentive for those with deep pockets, right? The institutions to actually rate those stops. It's very obvious. Just look back on your charts, look at the resistance, look at support, and ask yourself and see how many times price actually traded beyond this support and resistance only to go back into the range. So it's a very common phenomenon. So just something for you to take note of. So once again, for copper, right now I'm still in the trade. I'm not sure what will happen in the coming weeks. So I'll be watching this particular product closely as well. So last but not least, let me share with you sugar. Like I've said earlier, everybody loves sugar, right? Who doesn't love sugar? So this is the weekly chart of sugar. You can see the trend is clearly still intact, still towards the downside. And what is interesting is that on a daily chart, I noticed that sugar was actually in a range over here and over here. So I asked myself this question, right? Sugar in the weekly chart, price is in a range. So on the weekly chart, price is in a downtrend, and on a daily chart, sugar is in a range. So what happened is I noticed, it tested resistance once, twice, thrice, then traded lower. Then when it comes back to support, right, this multi-year lows over here is a key support if you ask me, and then it trade higher. The thing I noticed is that since it's at the multi-year lows, right, there should be a strong demand for sugar, right? The support should be pretty strong because sugar is currently trading at a very so-called cheap price right now. So, most traders will expect sugar to, retest the resistance here once more. But what happened over the next few days was that when it tested the swing low over here, it just traded higher a little bit, came back near the lows of the support, then it starts consolidating over here. So my thought process is this. Something is fundamentally changing in sugar, right? If there is a strong demand, price shouldn't be trading near support. It should quickly bounce off away due to the strong demand. But clearly, if price actually consolidating near the bottom of the range, it's telling you that the demand isn't as strong. And there will be traders who actually long and got their stop loss just below the low of the support. So what I did was I placed a sell stop order. I placed a breakout trade, right, just below the low of the support. Stop loss of 280 somewhere around here. And fortunate for me, right, price went in my favor this week, alright, and it closed somewhere around here. So again, my stop loss is over here. I can't really predict what will happen in the coming weeks. For all you know, price may just rally higher back into the range and then retest this resistance here once more. That could be possible, and I'll get stopped out for the loss on this trade. Because like I've said earlier, in the short run, your trades are as good as random. The markets can do anything to you. And the key thing is, if you have an edge in the markets, if you have proper risk management, that's how you will come out ahead in the long run. But in the short run, do not let your emotions get in the way. Right? No point, price having to go in your favor, then you are, the happiest kid in the world, woohoo, I'm in the money, I'm smart, I'm the champ, and then price retrace, it goes against you and stop you out. You feel sore, you feel sorry for yourself, you feel upset. It's just, no sense if you ask me, simply no sense. So that's a message that I want to share with you this week as well. So that's all I have for you, boys and girls, in this week's market analysis. If you do enjoy it, feel free to hit the subscribe button below, and there's a comment section that you can leave your comments as well. With that, I wish you guys and girls good luck and good trading. I'll talk to you soon.